Trading can honestly be this simple. All you have to do is follow this step-by-step strategy. This simple topic honestly can make or break your strategy. And it's so simple to learn. It is something that I feel has been over talked about, and so many different people create their own terminology, and kind of like it when, if everyone's cheating in the classroom, that it's the correct answers at the front of the classroom, and by the time it gets to the very end of the classroom, it's damn near chicken scratch. So what is order flow? Order flow is when the market has continued to respect either supply or demand, right? Meaning supply is constantly being respected while demand is not. Yeah, you want to see a reaction on the demand, but it's not respected to a point where it breaks the supply. It breaks that cycle. So kind of like regular market structure. So I'm going to go ahead and just draw it out real quick for you guys, just so we can, have something visual to look at here before we go on the live charts. Because I think, at least me, I'm a visual learner. I can't just read something and, learn it necessarily. I have to see it obviously done by drawings, or, physically see something, or I have to obviously do it to learn it, right? So in this case, right, it's a bullish market, right? It's constantly creating new higher highs. It's constantly respecting those demands. Now, in this downtrend, right, it's creating newer lows, and it's constantly respecting those supplies. So in each one of these points where it respects a demand or supply, it will be a potential point to create the cycle again. So if a demand is respected, more than likely it's going to create another demand based off of that. So the main objective here is to figure out where that's happening and also identify which cycle is in control. That's all you got to do, to be plain and simple. I'm going to mark something out that honestly, I feel that it doesn't even go that in depth nowadays when you look up a mentorship or a course on YouTube or whatever. This, I feel, was the biggest turning point for me. So, for example, right here, we have, a regular breaker structure to the upside, right? But what I like to do is I like to mark out the swing high and swing low. Keep in mind, obviously, this can be applied in, the 3 time frames you should be looking at. I don't want to say all time frames, because you should not have 5 different time frames you're looking at every day. You should have one time frame for the outlook, right, to kind of help you figure out what's the direction of the market. Then a mid time frame to slowly identify where your entry should be, and then you have an entry model time frame. So right now you should be asking yourself, who's in control, supply or demand? Well, if it broke structure to the upside, your expectation is a demand should be in control right now. And what we have to do is figure out where's that demand going to be respected. And from marking out these swing points, this helped me literally just ignore the noise. These 2 points, that's all you give a damn about. That's all you got to care about. It can be all of that range, that movement. It probably looks like a wiped off schematica right now. I know it looks crazy, but all you got to worry about is which swing point is breaking. And based off of that break, you should then find, okay, it broke structure to the upside. So most likely we have a demand that was respected. So with that expectation, I should then find where is the next demand going to be respected. Now, obviously, like I said, you can use this in multiple time frames. Just how you use it is what's going to change, right? So in this case, now it broke structure to the upside. So now I'm going to redraw my swing points again. So what I always tell people is do not get lost in noise. So I'm just drawing a cluster of a market. Let's just say, I don't know, we had something happen with Elon Musk. Then we had, we're about to go into World War III. I don't know, whatever. The market's just a cluster. I don't even want to say the word that I really wanted to say. But anyways, it's a cluster right now. And sometimes the market can give you this kind of movement, something that it's very unpredictable. It's, sweeping, highs, lows, and then it just somehow just goes in that, direction to the upside. Sometimes you will get something crazy. All you gotta know is what's swing high or low is being respected and which one is being swept or broken. So at this given point in time, the lows, these swing lows, are being respected. The swing highs are being swept or broken, whatever you want to call it. It's a different terminology in my opinion. It's being broken, creating a new high. So with that understanding right there, physically seeing it, the only other thing you could see, or at least what I view is, the next objective is, well, the demand should be respected again, as long as the cycle continues. And like I said, there's not a for sure strategy, not a for sure thing, but in my opinion, the market is all based off of probability. Our job is just to find what is the highest probability in this given moment in time based off of the data we have in front of us. That's all it is. So that's why it's very, very valuable to pay attention on the higher time frame, because moves like this will happen. And if you're not paying attention to these 3 time frames, and this is my opinion, okay, I know everyone's strategy is going to be a little bit different. 4 hour to have an overall look, and obviously to understand what is going to be your bias for that week, or maybe let's say midweek it changes, based off of this kind of movement. If one of those swing points that's been respected, let's say 2 or 3 different times previously in the past data, doesn't necessarily mean 100% it's going to be respected again. But that's what we have to see to understand, okay, in this case, the low was always respected. Well, now it broke. So our expectation now would be that high should then be respected, right? And now the lows are going to be swept until it happens again, where it breaks that high again, right? Now, this does not excuse because there's multiple different ways of entering here, but you can find an entry on that high right there. Personally, this is what I would look for. Same thing. I'm implementing the exact same thing. Order flow. All you're looking for is who's in control at that given point in time. That's all you're looking for, right? So in this case, I'm just marking out like some plain structure that happens. So in this case, it's slowly leading up on the lower time frame. Let's say demand is in control at this given point in time in the lower time frame. Like I said, different time frames, it's implemented a little bit differently. What we see is a little different. So demand is being respected as it pulls into this 4-hour supply. Okay, beautiful. Looks like that demand right there, it was respected. We like to see that. But as it's respected, it then plays into a supply, and then it blows through that demand. So that transaction, that's what, I feel like that's honestly the best way of calling it. It's a transaction between a supply and demand. So in that case, it's shown us that the demand was in control. It is now no longer in control, and supply is slowly taking control of this. So the next probable move would be for us to enter off of the following supply. That's that case. So let's go ahead and hop on the live charts to kind of show you guys, in a live market setting, how this would occur. So like I said, I only used 3 different time frames. So in this case, I'm on the 4 hour. The market, it swept that high, but it's slowly breaking structure to the downside. I'm going to let it play out. Okay, we have that break of structure. Beautiful. I'm going to go ahead and mark it out. I'm now going to hop into the 15-minute time frame just to kind of see, all right, right now, we already have our bias. It's going to the downside, right? Supplies should be in control. Hopping into the mid time frame to help us figure out where our entry should be around. So I'm going to go ahead and mark this out just because it was a clear breaker structure, a clear one, not, just a wick. I don't like that. I like something solid. So that's the actual low here that I can physically see, right? Where I would look for the market to break structure at. So as of this moment, I'm going to then hop into my entry time frame, which is the 1 minute, right? I want to figure out, okay, as of this moment, it's just been trending to the upside. Okay, now we start to get this little sign that, okay, it's probably going to find a setup for us where it's going to continue on that same order flow. Supply is in control right now. We'd like to see that. Demand used to be in control, but right now it looks like supply is in control. So we're going to let that play out a little bit. Beautiful. If you guys don't mind, I like to just go very slow with this just so you guys can see every moment. So I'm going to continue to pause it where I feel, we should be highlighting certain sections, just because I got to a point where I don't really need to mark every single point out, just because I just do it mentally. Just by looking at the charts. I only mark out my entry at this point, but I'm going to do that just for you guys can see what's going through my mind. So as of this moment right here, it broke structure to the downside. Beautiful. Now I want to see that same setup. Okay, taps into another supply. Now, this is the beautiful thing, right? I see a possible demand to start, right? And if you don't see it, I'm going to go ahead and mark it out for you guys real quick. So we have that demand right here. Beautiful. It reacts to it, right? It comes down from that supply and reacts to it. And then it goes back up and then blows through it. That right there is now a supply for me to take an entry off of. I feel comfortable taking that entry right now. And I'm going to give it some space a little bit. I would say don't go too aggressive on the stop loss. Obviously you got to weigh it out on what kind of, TP you're going to aim for as your final TP at least. I'm going to go ahead and mark out my fib. Beautiful. And funny enough, we're in the 50% of that. That's awesome. And as of this moment, we're just going to go ahead and let it play out. This was the trade that started my week this past week. But like I said, guys, okay, let it play out. Beautiful, taps into it. And we're just going to let it run. Now, what I would suggest is as soon as you hit 1 to 3 or 1 to 2, you can do one of two things. You can move your stop loss to your entry, which is now a break even. So now it's a risk-free trade. Or you can just take partials. Either one is fine. I'm going to let this thing just play out. It did take, a little bit. It is what it is. You just got to have that psychology that, whatever happens, happens. Me, that's just how I have it. This trade, I think it took about 20 hours. I'm not too sure. It was a little crazy. What is it? Damn near. I was pretty close. So, like I said, guys, if you have any questions or anything that you feel that I didn't really go too in depth on and you want me to kind of give you a little refresher, you're more welcome to reach out to me and my counterpart Solo E. And as always, stay profitable.